Yo, what is good, YouTube? It is your boy AB here with the new video. Um, this is a different style. This is a different approach. I know usually I post gaming content on my Evasive channel, but as y'all may or may not know, my name is Abubakar, or Booba, or AB for short. But basically, I'm bringing you guys this content where I would just be broadcasting, or not broadcasting, but more so breaking down my approach to trading and showing you guys how I handle my positions and what's my approach to my market breakdowns. I don't know. You guys can take away whatever you will. Again, I'm not a financial advisor. I do plan on getting a license surrounding trading. I'm also not new to trading. I am an 8-year trader going on to 9 years of trading. Yeah, I started back roughly around 2018, 2019, and have been trading since then. But I've known of trading since 2016. I just didn't start taking it serious until 2018, 2019. And then from there, I got into a couple of different programs. Of course, starting off with IML, as most traders did back during that COVID era. And then once I left IML, ended up getting into Lions of Forex. Come to find out, the owner was pretty much finessing, scamming, and not really being authentic about his practice, his business practice. And then that shook me up from even entertaining the ideas of joining other academies. But I believe I ended up joining one more. No, actually, I didn't. I didn't join another one. What ended up happening was I just got the course from someone else, and they had paid for the course. So I forgot the name of it, and the information was pretty. It was pretty good. It was solid information. It just didn't fit my style. But that's what we're basically just gonna go over. What I have learned and applied over the 8 years/9 years, and what works for me when it comes to breaking down the charts. Something I'm more realizing why I haven't seen consistent results is just because, again, over trading and fear and greed in the market, man. Those are really the main three things that's held me back. And for pretty obvious reasons, like everybody doesn't want to work, everybody doesn't want to sit here and stress about the next bill. So of course you're gonna have a tendency of wanting to overtrade and pretty much try to get as much as possible out of your positions, and that generally tends to blow back on you. So with that, like, a lot of what I'm going through now is more of an internal shift rather than an external shift, and I'm starting to see how in a year's worth time, 2 years worth time, like I could really see the results that I'm looking for out of trading. But we'll pull up the charts here. I'm gonna kind of get into it. I have everything already pre-marked as far as what my approach is. So I'm just gonna essentially use the tools and pretty much explain what's all going on here. So a lot of people understand market structure now, that trading has kind of become more of this trend than it has in the past. It's becoming more normalized. So a lot of people that may have dabbled or heard of anything surrounding trading would already know or maybe have heard of market structure. And of course, that's just when price trends either up or downwards, creating essentially a stair step in either direction. So if it's going uptrend, you're getting your lows, highs, higher lows, higher highs, higher lows, higher highs, right? So if you are a beginner, okay, just so I can slow down the pace for you guys, anytime the market trends in either direction, whether it be a bullish, right, or a bearish direction, you'll always see the market create a new floor and then come back and create essentially a lower ceiling before it creates the next lower floor. And this creates what we say market structure, where we're able to then understand where the anchor points are on that respective chart that you're looking at to know where the price should start pivoting or turning around. Okay. So when we find these anchor points now within the internal trend, we're able to do essentially the same exact thing just on the lower time frames, and then better understand where we are in the overall bigger picture. So what I like to do is I usually use these higher time frames like the monthly, the weekly, the daily, and the 4 hour to understand where we are in the overall trend. And the tools I tend to use are rectangle tools, right? So usually I'll use a rectangle to highlight the high, which the absolute swing high for me was here where this red box is. And then we had that swing low here where this green box is. Now, the reason why I color coded it red and green is because the red just signifies this is a supply zone. So some people may have heard of supply and demand, and essentially supply is where the market has a lot of orders filled at a high, and it will be looking to essentially distribute the funds from that zone. So when price gets to the supply area, you'll usually tend to see price exhaust, and this is the area you'll want to start looking to sell from, unless price miraculously breaks above the level, which then signifies that the bears or the bulls are in control and the buyers are in control. And if it actually confirms a break, you now know this level can now become the next green zone or the next demand zone, which basically is the same concept, just working on the other side. So if you come down to these lows here, you see all these orders get absorbed, the orders get filled in this demand area, and then this is where your buyers step in and your sellers who are cashing out from these old positions, because these are all sellers. You have to keep in mind everybody took a chance to sell until they tap this level, and then this is where they exit the position. They're usually cashing out. So simultaneously, when they're cashing out of their orders and people are buying into the position against those sellers, what tends to happen? You have a natural reaction where the market creates this push to the top side. And the idea is the only way you understand if it's going to keep going down is if it doesn't break above the previous high, in this case for the downtrend. So with that, I have this red box here to mark the supply and this to mark the demand, right? And basically I'm doing the same exact thing on every time frame below this. So if I go down to the weekly, what you'll see is I have this rectangle that highlights this as being the high, this is being the low, and now I understand price is trading between that zone on those lower frames. If I go down to the daily, it's the same thing. On the daily, I have this high here, and you can see I have the box labeled and the low here. And now you can see it. Anytime price was near these lows, you were able to buy every time price came back and pulled back. So price came here, created this high or low right here. You could have bought off that. And the reason why this is so powerful to look at price this way is because it's a lot harder to get faked out in the market. The only way you get faked out is you don't understand where the bigger time frame is trying to go. So if you know where the bigger time frame is going via the candles, then you'll already understand what direction you should be heading. Now, there's a lot more intricacies that come down to candlestick analysis that I will go over time. And if you guys have questions, you can always drop questions in the comments, or you can write something down. And then whenever I live stream, usually I'm live on Twitch. I'm actually usually live on all platforms. So I'm live on my YouTube, live on my Twitch, and I'm also live on my Twitter as well. So if I'm trading live on there, you guys have questions, you guys can just come through in the chat, just say, hey, what's up? I was just had a question from one of your videos recently, because this style here is just more of the how-to apply the strategy that I have. This is really, I'm not gonna lie, it's not unique. This is nothing new. I didn't really reinvent anything here. It's just how I look at things to make it easier for me. And everybody's still looking at it the same way. They just break it down different. But all the same principles, all the same rules apply. And everybody's not only breaking the charts down different, they're also applying the rules different. Some people are trading breakouts. Some people are trading reversals only. Some people are trading after the confirmation of a breakout and retest. All different reasons to be getting in and out. But the overall idea is exactly what this is. So another way you can kind of look at me using the swing highs and swing lows is, again, you can think of them as anchor points. So the anchor point here, and I'll circle them too, just so that as I zoom in, you can see. here and here. If I go to the weekly, here, down here, we got a monthly, or no, excuse me, the daily. You got here and down here. This is where you can kind of start zooming in and get a little bit more specific. You go to the 4 hour. Now the 4 hour was last here and here, but as you can see, price came near the lows. What did it do? It rejected as it should, and then what do? We buy towards these highs, and then what happens? Price comes and gives us this little minor pullback, basically almost like a flag post pattern because of it landing at a certain percentage when it retraced the 382 right here. So you can see if it retests in the 382 or 389, it's usually roughly a bull or bear flag. So here it retested, continues up, and let's take this off just so it's less messy. Let's go back to, yep. See, I like it real clean, real clear, but wait, there you go. So the 4 hour broke through, right? Came back, broke through here. It was at retest, and then on the 1 hour, this is where I have here and here. Okay, so the updates I'm gonna make on this, of course, we're gonna zoom back out to the 4 hour because that's pretty much. I always like to work from the outside in, and the way I think about it is like it's like a magnifying glass. So I'm putting these boxes around to tighten up the area I need to focus on, and then everything has like a magnifying anchor point, because I know the true anchor points where price is actually going to react according to the higher time frame structure. So if I go to the 4 hour here, I pull this right here to the right, I know this low right here led to these highs. So what I would do is just drag my box up here, right? Slide this over, right? And then we'll lock it. So now all I'm looking for is price to continue to do the same thing. And then on the 1 hour, when we drop down, we know we was trading between here and here. So if I were to slide, if I click on my 1 hour zone, right, it says 1 hour right here, press this, drag this to the right, could lock this. You see what I'm saying? And then here I know this low led to these highs. So I know this has to be the new swing low, right? And then I could drag this all the way up to here. Bada bing, bada bow. And now, since we're on a lower time frame on the 1 hour, I have these supply and demand zones that work the same exact way like they do on the weekly or on the monthly chart. So I have up here being the area to look to sell. Okay. And I have right here being the area to look to buy. Also, let's remove these indicators. We'll keep the EMAs. We'll leave ADR. Take that off. We can leave the sessions tool. Okay. I don't want some of the other indicators. The EMAs are just fine. So, as far as the information regarding like my EMA tools and stuff like that, I'm not gonna lie. Rather than making a video and stuff on it, I might come around to it at some point if it just seems overwhelming when people keep asking over and over. But I also don't want to just be kind of giving out too TMI. So if you guys come on the live stream and then you ask me there, I'll be more than willing to tell you what the EMAs are. I mean, honestly, I can tell you what they are now. It's not a big deal. They're EMAs at the end of the day. So this right here, I have a 50 EMA, I have a 200 EMA, and then I have an 800 EMA. Okay, and it's very simple. My 50, if it's above the blue, light blue is above the black line here, that's considered price being an uptrend for me on the lower time frame, just overall. And then the 800, if price is above the 800, generally price tends to trend in that direction for a long period of time once it crosses the 800. So it's a very strong level where if price comes near it and rejects, you know it's going to be trending away for some time. Now, what I like to do is wait for price to come near the EMAs and show the direction of price and then look for the rejections. Pretty much look for price to exhaust and look for anywhere where price is getting tired, fatigued, and then giving us an order block or a bullish engulfing candle. So with this, if I zoom back out, right, we just made the adjustments. What you're gonna notice is the overall how the structures kind of play together to kind of create this like puzzle like effect. Now, I know on my YouTube channel it's called High TF Mob, right? And the reason why I call it High TF Mob is because we're the high time frame mob. So we use the high time frame to our advantage, and we only follow that. Anything that's going against the direction of the higher time frame is a fake move. It's a false move. You're literally gonna become a part of the liquidity that's gonna actually drive the market the direction it needs to go. So anybody that thinks it's gonna sell down here on those lower time frames, oh, it's a double top pattern, whatever the case, you become a part of these wicks that they then use to push price the opposite direction. So a lot of sellers thought it was going to sell at one point. They trapped all of them in this position. A lot of buyers knew at this level to start looking to buy, and that's why you had this reaction. So not only did they liquidate a lot of sellers that were holding, going short, but then they also bought in, and then they pretty much they were squeezed out their position. So when you look at this, right, and you think about how the candlestick forms, the candlestick generally tends to open up. Let's see here. So the candlestick usually tends to do something like this. Okay. And like this. Okay. This is red and boom. Okay. So now usually it's red and green candles. I just do green and black because it's easier for me to, it just pops. Like you can customize the colors however you want. But the black candles are technically my short candles. But in this example, we'll go red and green because that's usually the default color for everybody. So when you have a green candle, right, what it basically means is when the market's open on a lower time frame. Let's see if I can find it real quick. Whew. Okay, all it means is when it's a green candle, price opened right here, it went down first, then it went up, then it closed right here. Okay, so price opened here, it closed here. Okay, we can even do this. Okay. And when it opened here, it created the low of the day. Or we can just, for this sake of the example, we'll just say it created a low and it created a high. So we go right here. See what I'm saying? So the only difference is with the red candle, okay, price opened up here, right? So open here, it went up, then it went down, then it closed here. Okay, so that's the key difference. So what tends to happen, right, when prices doing when it's printing these candles on the internal or lower time frames, price is just creating these little structures. High, low, high, low, high, low, induce. It traps traders. People think, oh, we're going this way. They get you stuck in there, and then they start bringing it down, 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 all the way until right until down here. They trap traders in the sell, make you think it's gonna keep going, and they come back up, up, and close. Okay. Now this was a terrible drawing, but you guys get the gist. And all of this motion is happening inside of this candle. So this is why you have areas where there's an inducement that happens, right? At different times throughout the day, at different sessions. And you just have to understand where you are at the times of those sessions to know what should be happening. So essentially, we zoom out to see the candle, and we zoom in to look at the details of how the candle is moving on a minute by minute, 5 minute by 5 minute, hour by hour basis. So with that theory in mind, that is where market structure is important, because if you can understand now where you are in the overall bigger picture, you understand how the candles are going to print to fit inside of how the candles are going to like print to fit inside of that picture. Let's see. Okay. So we'll delete that. Okay. So that's going to sum up pretty much what we're looking for. So now that we understand that's the behavior of how these candles print, now you can see this candle is printing a green candle, right? And it's printing pretty bullish. It's showing that it's like when you see these fuller candles, it just means there was more volume, there was more order flow, which caused the candles to print more bold and have stronger momentum going in that direction. But the moment you start seeing the candles start getting short or smaller like this, you know the volume is shifting, the order flow is changing, meaning now the orders are going back the other direction. So that's showing signs of exhaustion is what we call it. Anytime I see wicks, I just think of exhaustion. Price is getting tired, it's getting fatigued. So you'll see exhaustion tends to happen near the highs and the lows. If you can identify highs and lows, and then also on top of that, be good about understanding how candlesticks form, you'll understand, okay, on the monthly chart, it takes 30 days for one candle to print. So that means it's January 24th right now, 2026. That means next month, I'll be looking for longs maybe around the second week of next month, because we know the first week is probably going to be manipulation, because they have to set up the wick of the candle. They have to set up the tail of the candle, kind of like this. And then after they set up the tail, maybe week 2, we're going to start seeing the candle start printing in favor of going back to buys to keep pushing this trend up. So what that candle will look like is something like this. It will go down, right? And then we'll probably have, by the end of next month, by the end of February, probably have another push up like this. So our job as the speculators of the market is to not catch this whole move, because if you're trying to catch the whole move, right, you got to have a lot of capital. Not only do you have to have a lot of capital, you're going to wait a long time. You're probably going to wait 2 months, 3 months, 4 months before price gets all the way up here. Unless there's just one large candle that just prints up, it just spikes down crazy. Because the only way it's going to move up this much, that fast, is if it spikes down that much, that fast. So what they take, they have to distribute back out, right? So if we even got a push within 1 month, the candle would look something crazy like this. It wouldn't look that wide, but it would look something crazy like this, just a really long candle. And you'll see a long wick to the bottom, because they would have to collect all these contracts before taking it up. So this would be the manipulation part of the candle, and this is the actual distribution. So next month, right, I'm not really in a rush to try to look for buys at the top of the month. I'm just going to be watching, observing, and paying attention to what day of the week it is as prices setting either the high or low. So if I zoom into the price action now, you'll see what I mean by the internal structure now. So you have this low, high, higher low, higher high, higher low, higher high, right? And you can see we already knew within the candle. We can go to the monthly. We knew within the candle we were on the way up. You start zooming down, you start understanding what part of the candlesticks you're in using the lower time frame structures. So now I have an indicator. It's called a multi-time period separator, multi-time period charts. Now, the way I set my tool up is pretty specific. I have it set for a time frame of 1 week. I don't have it set to the auto time frame where it shows on every single time frame and separates it by whatever I set it as. So basically what this is doing is like when I drop to the 30-minute time frame, it's chopping up 1 week of the market. So this is a week of market movement from Monday through to Friday. From Sunday to Friday, I should say. So market open Sunday until Friday. Market open Sunday until Friday. And what this helps me see is basically what the weekly candle, the one candle on the weekly chart is doing for that week. So if I know last week this was the candle, what you'll notice is when I go to the 30-minute, last week's candle was this behavior. So on Sunday, it gave us the manipulation to the top side. It filled the volume going to the downside. And then it kind of gave us a trap, pinned down here, and then gave us a reversal. It overall consolidated, just went sideways. And then towards the end of the week, it closed near these lows. So if you go to the body, if you look at the candle here, hold on. Let's see. So I'm going to be on this time frame. I'm going to draw that motion. So it opened here. It went up first. Oh, that's going to be a little weird. Hold up. Open here. Went up first. I wonder if I zoom in, will that help? This probably ain't gonna change shit. Not a damn thing. That's crazy. So I have to go down. Okay, this will work. Let's do this instead. We'll use a brush tool. So, god damn. Wow. Not even that is working now. Well, let's try this then. Okay, this will probably help. We'll do a horizontal ray here at the open and a horizontal ray at the close. And we'll also put it at exactly the, oh, it's not even having it. Okay. Because I wanted to put it exactly at the start of the candle. Okay, I guess it has to be halfway through. That's fine. Because then, I guess that works even better because then you'll actually see the start of the... Yeah, that's perfect. Okay, so you can see it opened up right here, went above, came down, down, right? This is where the bottom wick was created at, went back up. This became a bottom wick for a period of time until it closed somewhere around here. And when it closed right here, hold on. So it closed like right here, and then the next week opened up with a gap to the downside. So then they filled this gap right away at the start of the week. Price buys back up. And then this is the week right now that just went by. So now we know next week we're probably gonna either get some type of resting phase where price consolidates, gives us a jab to low and continues, or it'll just keep driving up. But I would expect to see some type of consolidation or retracement after this buy that just happened. So using this multi-time period separator really helps, because now I know throughout the week what is essentially what's happening within the weekly candle itself. And if I go to the 15 minute, I have another tool that allows me to see the sessions for Asia session, London session, and New York, as well as the New York PM session. But I don't really try to trade this session. So what we do know about the markets is there's, at least when it comes to currency trading or forex trading, you have 4 different sessions. You have your Asia, London, New York, and then you have your Sydney session, but it's essentially your afternoon New York session. So with that, you generally get a news release during the session, which will lead to some type of manipulation of price, which gives you the opportunity to enter on the bigger time frame. So the idea is you look at the overall bigger picture. In my case with this right now, what I'll be looking for is I would like to see price, if it's gonna pull back, respect this low right here before I look to be interested in buying any further, right? So what I would like to see is price give us some type of a pullback down to anywhere within the 786 entry area, or 70%, 618. It could be even the 30%, 38.9%, anywhere around here. As long as it respects this low, I'm okay to buy. And if I drop time frames, right, what you'll end up seeing is you can see how here the sessions creates a high of the session, a low of the session, and then a close, right? They close up here, create this higher low, which tend to happen during New York session. Then it creates this high here, push past, creates a higher low, higher high. So what I'll be looking for is maybe Asia session will give us some type of consolidation. Maybe you won't be able to break the highs. We'll look for the shorts, give us some type of low, London, New York, and then give us some type of entry to continue up. That's if it decides to pull back this far. If it doesn't, then that's fine. You know, we'll see if price is just going to respect and maybe give us some type of a bull flag right here, stay above 38%, eventually hit lows and then continue up, right? But the idea is, what we would like to see, if we're going to even take this entry, is at least respect the previous low for the 4 hour here, to where we can find our entry using a 15 minute. Because we understand after it goes past this area, price is liable to flip. And if the 4 hour is going to flip here, that means the daily candle is going to start going down on the higher time frame. And then the weekly candle will be starting to pull back. So at the moment, right, everything is looking extremely bullish. And like I say, on the 4 hour, I would need to see this start pivoting like this in order for me to start believing the daily or the weekly want to start turning around on these bigger time frames. But if that zone is respected, this becomes an area of interest, a point of interest where we can now magnify or zoom into this area and find our entry. So there's another tool I have, which is a volume tool, or the this one's called the SBP SBP HD, but I forgot the actual term. Like somebody might, if you remember in the comments, let me know, or it might come back to me. I don't know why I'm blanking on the name. I think it's like a Delta volume tool or something. Let's pull it up real quick. The session volume profile. That's what it is. The volume profile tool. So essentially what this is it shows me pretty much the low of the day, right, and the high of the day. So this purple tool is showing me the previous daily low and the previous daily high. And then right here, this is the current daily low and the current daily high. So we knew at the start of the day, this is where we opened at, and price created a zone of manipulation here. This is where the inducement was occurring for the day. So they went down, they created their, and what I'm gonna do is I'm gonna go up to the daily, and you're gonna see how that plays into the tail of the candle, right? So I could even get more specific. And like I said, this becomes like a magnifying glass. So if I drop down to the 15 minute, all right, see, I went to the 4 hour first, it ended up being a little bit higher, right? If I go to the 4 hour, if I go down to the 15 minute, you'll see right here, London session lows got set right there, gave us that engulfing, and then got out of there. But the only way you would have known why that area was area of interest is because of the daily candle. You knew the daily candle opened from right here, and what it do, it went down against this previous candle first. And when it went down against, it was just a matter of how far will it go down before it starts to go back up. So what tends to happen during these sessions is you get these anchor points during your Asia sessions, your London session, your New York sessions, where price, once it sets that anchor within that session, it becomes the anchor of the higher time frame candle. So you can trust that level as being the low of the day or the low of that session, and buy into the move or sell into the move, and place your stops just beneath or just above. And generally, it's better to start doing that after news impacts the charts, because then you have almost virtually 0% of a chance of price doing some crazy shit, because it already did the crazy shit and you watch what happened. And now that the crazy shit happened on the chart, you're able to sideline, wait for the reaction, and then apply what you already had as a speculation to the now ready move, because there's no more uncertainty that could arise. So that's where, for me, I use the session tool to understand the anchors. So Asia session set a low, London session came, manipulated traders into selling right here, thinking it was going to go lower, but this is where they trapped traders for the start of the new day. They induced everyone, and London session tends to be the inducement zone or inducement session. So now they set the lows of the day, shifted away, and then during New York, they gave you a higher low after the breakout, gave you a retest, and now you can take this buy right here. Now, just this little move right here, right? This little move right here could pay anyone $8 to $20, $2,000, $5,000. All of it is a scale, right? Because the more money you're working with, the more the multiplier can increase on your positions. The volume increases on your positions, so your returns are higher. But the reason why I'm really making this video is because my worst habit was trying to go for more when less is more in trading. If you just take a little move at a time, and say it's even paying you anywhere from $8 to $20, that's about the same someone makes per DoorDash order. Now, if I ask you as a viewer right now, would you rather go drive and grab food and deliver it and go across town to make $8 to $20, or would you rather sit on your ass, be patient about price developing, and take a clear entry and a small move and get in and get out and hold for maybe anywhere from a couple minutes to a couple hours? I mean, y'all tell me. It's pretty obvious for me. You know what I'm saying? So that's where less is more and that mentality kicks in. And even without the fib tool, right? The fib tool to me is the ideology of the motion of the market. So if you can imagine a slingshot, then that's essentially what the fib tool is. It's like a slingshot, right? How far you pull it back is generally how far it tends to shoot out. But also, if price pulls it back too far, what tends to happen? Slingshots can break, right? The rubber band can snap. So if price pulls back too far, then what does that mean? That's telling us the trend is done. We ain't going that direction no more. Okay? It's getting too weak. So now we know next week, right? They're gonna have a new day, and there's gonna be a new inducement zone for next week, right? And it's gonna set the new low of the day during probably the London session. And we're gonna come back during that session and see what the news does. And then if it hits these lows and doesn't break, guess what I'm doing? I'm gonna buy. And I'm gonna just rinse, wash, and repeat the same process. So the other nice thing, right, is because this is where the term confluence kicks in, and I'm sure most traders have heard of that. If you're new, if you're a beginner, confluence is essentially when multiple tools on your chart mix or show the same signal at the same time. Okay, so my buy signal within just the session tool is that we're buying from a low of the session. The other indicator is that we're bouncing off of the 50 MA, and the 50 is well above the 200. So we know there's no sign of weakness when it comes to the buyers in the market. Then we also have, we're near the low of the day itself after inducing the highs of the previous day. So the previous daily high was here. Price gave us inducement here. It didn't really break. It was about right here when it actually broke out. And then it came and retested right here, gave us the order blocks, and then didn't go any lower than the previous New York session. And again, it induced, took out the traders for Asia that were buying here, and then continued up. So if you were buying in Asia from here, your stop should have been down here, and you would have been okay. But they liquidated these positions and then got out of there. So now that was confluence number 2 for me. The 50 MA bounce. 3 being the breakout retest, and then there is again 4 being that we're using my volume tool. If I actually put on the settings properly, this is how it should actually look. Okay, so this is how it's supposed to actually look. So you can see it's just showing me the order flow. It's showing me where buyers should be strong, where sellers should be strong. Here, this green bar shows you the pretty much the point of control, where price is more likely to consolidate and where there's a tug of war going on with price. So the idea with this point of control is wherever price shifts out of the point of control tends to be where price is going to continue. So here, price had a point of control, gave us this low, kept tapping, and then got back above. So we knew that price is going to keep going higher. Here, price shifted above, gave us that retest, and then the volume indicated that buyers were stronger here than sellers. And usually what tends to happen here is like these areas where the point of control is, you can see how the bars for sellers look higher than the blue bars. But if I go to the area, right, it's showing the volume number right here. So if you pay attention, it says 7650, but look how it changes. 957, 585. But it's telling you essentially who's winning the war when it comes to orders or order flow. So here, if I see it's showing me, right, sellers have 957 orders placed at the price 67595 on the far right. And there's only 585 contracts for buyers in this area. What that tells me is there's more sellers here. But the issue, right, when I see there's more sellers here, is that the numbers are telling me there's more sellers, but visually what's happening is it's being blocked. When you see that happen, that generally tends to mean that the real move is going the other way. Because how is it that I have more orders, more sellers in, but there's no reaction of price actually driving lower, and you guys still printing and golfing with less buyers being in the market? So this is what they mean by inducement or order absorption. So the orders here were absorbed as price was being sold down. They were selling, and the buyers basically absorbed the contracts for all the sellers who were getting this position wrong. And the only way someone could have known that was happening is looking to the left, understanding that price gave you this push to the high and is giving you this higher low. Right? So this becomes a retest level. And all those confluencing in one area, it helps you be able to actually understand or at least have more confidence behind your bias. So then there's also the value area high and value area low, where it's, you can imagine like this is the 50 on the RSI, like the middle of the RSI, kind of like this tool right here. I forgot I had the volume heat map too. But basically, think of this as like 0%. This is 100%. This is 50%. And price is essentially has a median, which is the point of control, and that's like the teeter totter. And then the value area high is like the out of bounds for the top, and then the value area low is the out of bounds for the bottom. And usually you'll look for which is where the breakout is occurring from the point of control, right, to figure out the retest. So point of control is here, price tilts this way, comes back and bounces off of it. If it's showing signs of rejection and it's showing orders being absorbed, then you're taking those long. And it's happening near your 50 MA. You see how confluence starts to work? I'm not going to second guess. And now if I take my position, I could be extremely confident that, yeah, I could put a stop right here and price should not come back. And then what you'll notice is, guess what? We're inside of our higher time frame candles. So I'm on the 4 hour. If I go to the daily, look where that entry would have been at. So this is where now if I go zoom out, right, this is where I say less is more. Because all that was going on inside of that one candle. The more I zoom in, boom, right? You see how it all comes together. So this is why the sessions are important. This is why when people tell you stay away from the market past a certain time, it's because you have to let the market breathe and set up the moves. As it sets up the moves, you'll know specifically what times you should be showing up. And then if you don't see nothing, don't take nothing. Now, I'm going to take off some of these other tools because it's going to get confusing. But that's the session volume profile tool. If anyone likes to use that or would like to use that, feel free. I believe the one I have is this one. Doesn't even say who it's by. So that's unfortunate, but at least you guys know it's session volume profile. And again, the way I cater it or customize it is I turn off the value area high, I turn off the value area low, I keep the point of control on there, and I take off the volume profiles on the side. I don't really need to see the order flow because the order flow just, yes, it's good to have the actual data there, but I could simply just hover my mouse over the area, and then rather than have the visual create all that extra noise like so, I could just look at the numbers instead. So if I go forward, you can see the numbers are still there in the top left corner, like right up here. So at least I know this is still the median. I know this is point of control. I see the orders are sellers are beating, but it's still not showing that. Same thing here. So yep. So now what you'll notice is as I go through some of my other charts, it's the same deal. So I'm going to zoom out, see if you guys can notice. I switched it to EU this time. My main pairs is usually AU, EU, GU, and then it's UJ, GJ, and AJ. And you can see this is a beautiful, beautiful move setting up for next week. So I'm going to kind of start speeding through a little bit more of the rest of the charts because you guys understand what my strategy is now. And at this point, when I trade it live, you guys can ask me whatever questions. But for now, you'll just see I'm going to essentially rinse, wash, and repeat the process of my method of approach. And it'll just become more clear to y'all over time, like what I'm looking at and how you should view things when you're trading. And when to be patient, when to be aggressive. So yeah, this inducement to the highs here. Okay. So I'm just making these adjustments here. So I want you guys to notice something with this 1 hour. Price is technically trading between here and here. Price recently gave us a push to try to break out the highs, but didn't really break. And the reason why I say it didn't break is because right here at this line, this candle that printed is still touching it. And the very next candle didn't break above. It just poked as if it was going to go higher, and then it came and closed under. So if it would have been a confirmed break for this high, price would have had to print one more time above here with the wick to the downside. It doesn't need to have it, but we would have just needed this to print above the previous candle, right? So if we would have had a candle print right up here and then not be touching this, then that's a break. You can imagine it like tearing through paper. So this was an inducement to the highs, and this is why everybody that bought right here ended up getting trapped into this move here, because this was never a confirmed break. So if you were looking for buys when it came right here, it gave you that fake engulfing, you would have got stopped out here. And if you would have kept believing, you would have got stopped out until it actually came to where it wanted to induce, which was near these lows. So now that price got as close as possible as it could to this anchor point, you can see price is creating that slingshot effect again with the FIB. So at 786, we're looking at buyers are starting to step in, creates a W formation, change the character, then we get the breaker structure. Price comes back, gives us a retest right here in this zone, right? So this became the area of interest after price broke above, and then this became your entry zone. So you would have been comfortable knowing that, hey, I already got the rejection down here, and I know where it just came from and where it should be going. And you're targeting these highs. So now what we'll be looking for this next week is price to kind of give us a break above my 1 hour zone, and then give us that retest to continue. And regardless, the initial decision is going to be buys for me, because I'll be essentially a part of that first wave that's trying to go test the highs. So price likes to pump like this, where the first thing it'll do is it'll push and tap it and get away from it. That's usually the first reaction every time. I honestly, over the years, it's gotten me so much that I have to just genuinely accept that's what's going to happen as a natural reaction in the market. Usually it'll get to the first target or get to a target level, tap it, and then get away from it. Unless there's some major fundamental driver, like some major news pushing that chart, it generally will go to the level, tap it, and pull back, which means you have the ability to capitalize on the move 2 times, most times. So that first time you can get out and take your profit at the highs, and then the second time you can actually wait for it to wind up and give you a very clear move to get back into the overall trend. So my target, if I'm getting into this, is going to be going down to the 15-minute. I'm going to look at the previous session low. So the previous session low is New York's low right down here. And that will be my area of where I would not want to see price go lower than that. And then my target is going to be, again, where those wicks were, right? So this could be a 1 to 1.5 setup right here, which is not bad. If you really, really want to get even better with your entry, you go down to the 5 minute, 1 minute, and you confluence it. So you identify areas of interest here. So we're on the 1 minute. If I'm on the 1 minute, I know this is what my trend is looking like on the lower time frame. So we know I had this push from here to here. Price came back, gave us this to here to here. Came back and gave us this push here. So my area, a fair 1 minute stop loss would be somewhere right down here, internal. And now it becomes a 4 to 1 setup, almost a 5 to 1 setup. You can get a tighter stop, and you can trust this being a potential low because you went off the internal structure, and you understand that if the next 1 hour candle opens or the next higher time frame candle opens, so long as it does the motion of giving you the bottom wick and then respects one of these lows, you will automatically know internal time frame it's being respected by just looking at the higher time frame. And now you can just be on the 4 hour, you can be on the daily or whatever, and those could be other time frames to use as discernment. Because if you know that you're in a 1 hour candle at 7:30 p.m. and you know in the next 30 minutes the 4 hour candle for at 8 p.m. is going to break off too, you might want to get out just so that the next 4 hour candle can wind up too, while the next couple hours do what it has to do. So I know that might go over a lot of heads, but I promise you, if you start to get repetition in on the charts, you're going to come back and hear what I just said and be like, I totally understand what the fuck he just said, and it makes sense. But again, for beginner traders, if you have questions, try to tune into the lives so that I can go ahead and break stuff down day by day with you guys, because I don't expect everybody to understand this. One of my last, understand it right away, if that makes sense. So next tool is my pivots tool, which shows me the lows and the highs of the price action. This literally is doing pretty much the automated work of finding anchor points on the internal time frames and the external. So what I mean by that is internal would be like here, 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 right? That's more internal. But if we're talking external, it would have just been this. Right? We're not worried about all the noise inside of it, but you can see the pivot tool gets all the internal pivots too. So this could be added confluence to help you if you're trading like those 5-minute time frames and stuff, those lower time frames, because now you understand, well, I'm in this overall leg already. We understand the Asia session pivots are happening here. We know this Asia session high, this Asia session low. London session created a lower high, lower low. We know it pulled back and then it gave us this exhaustion. So it gave you this high, higher low, higher high, and then rejected. Double top pattern, lower high here. You could have got an entry clean. Take it down to at least London, tested this, got out here. And then once it comes back, retest, boom, it exhausted again. You could take more cells, you target here, then you can start targeting here. So it gets to a point you can start racking up or raking in a lot of money. And again, like I said, if instead of going to a grocery store and delivering food, you can make anywhere from $8 to $20 between here, between here and here, right? So wait, let's actually redraw this. Right? So between here and here, you make another 8 to 20 here and here. Just within 3 moves down, you can make $60. And all you did was just sell and keep paying attention that like, hey, I know what direction we're going already. I use my GPS to break it all down. Now I'm just getting the small pieces on the way down. And then once the lows hit, you start looking the other way. Why am I looking the other way? Oh, because a higher time frame needs to be going up, right? So I don't want to get lost in the sauce while the price is selling on a lower time frame and forget that I'm going counter. It's ideal to not trade counter because some more times than not, it'll move sporadically the other way. So to avoid that, you'll just, you'll naturally just trade with the higher time frame at all times. Less confusion, less heartache, trust. So yeah, so we can see prices breaking above my supply zone. So this is good, showing good signs of buyers being there. You can see right here, this is a prime example too. Price broke above my supply zone, came down and retested. And you can see it didn't just like hit it and then just you start buying right here. Like, no, wait till it shows that it's exhausting. Wait till it starts shifting. And then now you can start looking to buy. You see what I'm saying? But if you just get in because, oh, it's here, it's already ready. Like, no, it was here and already ready. You would have lost money. It was here and already ready. You would have lost more money. It's not until things started shifting where price gave you this change of character, then gave you that break of structure to the continuation. And again, if I go up the time frame, why is that happening? Oh, well, the monthly. The monthly's got to get up to like here, then up here. See, if I go to weekly, same deal. So now you can see weekly's kind of giving you the break above these highs right here. Right? So once it gets above here, I'll be looking for that retest, continue. And then create that stair effect. So we'll be looking for longs, AU, EU, and GU. And then if we go to UJ, it's been going short on the internal time frame on the 1 hour. So we can see prices coming down right now. We can go to the monthly. Price is giving us a top wick. What do I mean by top wick? Well, you can see price gave us a wick at the top side, tried to go buy first, and now it's giving us a top wick to go down. So now we can go down to 1 hour, and you can see there's a lot of room for price to kind of give us that push to the downside, and it's falling below my 800 EMA. So you see how I'm quickly piecing together confluences to understand what's going on. And that's not using news. That's just strictly technical work. So when you combine things like that, you have more confluence, allows you to trust your moves. And then now you risk low. Like that same $820, risk that. Risk $8 on the account to make maybe 10, 15 bucks. Because again, you were going to go do it if you're in a DoorDash. You're going to make 20 by the hour if you're going to go DoorDash and drive around. So instead, at the click of a button, hey, make that 8 or 16 bucks. Compound it. By the time you have $300 in your account, now you're risking maybe 25 bucks to start making 75 or more. Now you're risking $50 once your account hits 500 to make 150 or more. Now you're risking, you have $1,000 account. Now you're risking $100 to start making $300 to trade. And it's just scalability. So for me, when it comes to this whole setup, right, I see price got back into the zone. Price didn't necessarily give me a clean break out of the 1 hour time frame. So I'm more inclined to believe this is going to drop like drastically to the downside. I'm more inclined to believe that because it just seems like it just induced the highs pretty heavy. It doesn't really have too much of a reason to keep going to the upside unless it starts rejecting from the lows again. But it seems like we're at all-time highs. Yeah, we're at all-time highs too with UJ. So we'll have to wait and see. But like, here's my rule of thumb, right? Whenever I see prices starting to turn around like this on bigger time frames, my rule of thumb becomes I need to see it break the next lowest wick of the previous candle. And if it can't break this, then I know what's gonna happen. I know it's gonna manipulate. I know it's gonna bounce off. Because if it respects this, what you'll notice in the history of price and price action, anytime you see the absolute lows of these wicks, what's happening? It's always lower than the previous. So that's where that concept of the internal time frame market structure comes from. You see, it respected before, it respected. So what would be the break of the pattern? Is this candle comes down, it not only taps it, but it breaks through. It closes on the line. You can see none of these ever even came close. Never came close. This one tapped it, so at one point it was touching it, but it never closed below. You see, it went right back above and it closed way up here. So that's how everybody here knew when it came back down, just buy it, because this was already the first sign of rejection. So this, if I see the same thing here, this candle would end up looking something like this, right? And then this would end up being green, going to the upside. But if this closes to the downside, like this, now the whole ball game is shifted, because now I understand we're gonna start looking for this, right? We're gonna look for the fall to go all the way down. So that stuff doesn't happen that fast, but it's my rule of thumb because that's gonna take time to happen and occur. But in the meantime, right, if I want to make a little bit here and there, this is where there's the time to use the internal time frame, use the internal time frame structure. I'm gonna go to the 4 hour. We're gonna adjust this real quick. So, like I told you guys earlier, for the 4 hour, it was between here and here. And my rule of thumb I like to use with these boxes is look at the low that led to the breakout. So this low was the last significant low before price led to these highs. So my 4-hour swing low is going to be right up in here. I'm going to drag this to the most current price. And then my 4-hour high is up here. Now, if we look again, price gave us this, what seems to be inducement, but let's see if it actually gave us a breakout. I think it did. It did break out. Okay. So it broke out again. See how these are printing off of it? It's not touching. This first one was touching. This next one printed above. And then this one rejected, continued, printed above, rejected, continued, printed above. Right? So we know that's actually another break. So what I'm going to do is zoom back out. I'm going to look at the low for the 4-hour. It's going to be here to here. So, boom, like that. And then what we'll do is make the adjustment on the 1-hour. So 1-hour probably looks different. So this is my 1-hour here. You can see the box. I'm gonna unlock it. If I look at the time frame, so before my 1-hour was between here and here. Price came, gave me this low up to these highs. So it kind of matches up, and this is fine. This can happen where two time frames have like the same lows and highs. But again, just to clarify, right? Because another way you could do this is use the line tool. So this low up to here for the 1-hour. So boom, boom, and boom. Okay, drag this out and bada bing. So this just, and that's just a visual representation. That's a visual representation of confluence is what you're seeing right here. Okay, so now I can put this back on candles if you want and make whatever adjustments you need. What you'll notice too is for my 1-hour time frame, you can see right here it says 1 pixel, but when I click the 4-hour, it says 2 pixel. I'll press the daily right here. I know this is daily because it's a 3rd pixel, and the weekly is 4 pixel. So it's just the boldness of the line. So that's another way I know without looking which lines or what anchor points I'm dealing with. But with this one right here, these are going to be relatively the same. So that's good. Because like I say, it just makes the level stronger. Once you have confluence like this, now I know if it does break below this, it's definitely going down. Like it's not I don't have to question it because this level is so strong. It included 2 charts, 2 different charts, swing lows. So damn, I'm fucking stuttering so bad. I don't know why. But it's 2 different charts swing lows. So if I have a 4-hour swing low here and a 1-hour, then the level just has natural confluence. And what I'll be looking for to go short is a complete clean breakout and then a retest of that level, and then vice versa. If it's gonna go long, it would just reject somewhere down here. I'd find some buys and I'd look for the longs to the top side. So that's gonna be that. That is for USD JPY. And let's see. Okay. And then here's GBP JPY. I believe it's in a similar predicament. Yep. Now, GBP JPY is a little different because it looks like it does have a room to the left side to go higher. So I'm going to be more inclined to believe this to go up long term rather than short. And the area we're in, like, I don't know if you guys noticed this too on my lines. With the 1-hour time frame, I have this midline, right? That's kind of like teal. So I know if price goes and remains above, that buyers are in control. and it becomes this kind of like internal flip area where if price gets below it, I know that sellers are kind of in control. Not kind of, but are in control, because that's the visual representation. So even here on the 4 hour, it's the same, and I only have it for the 4 hour and the 1 hour. So the 4 hour swing low being here and here, and then you can see the mid level is here. So price gets above it, you can see it just stays above it. Before, when price was below it, it stayed below, and then reversed from the anchor to the mid level, broke above the mid level, got to where it is. So in this case, right, if price is gonna come back down, I would be looking for longs from the mid level or higher, and then if it gives us the break above, I'll look for longs after the breakout and retest, or I'll look for shorts if it falls below the 50%, and if it falls below the 1 hour low, and so on and so forth. So you can see how it's everything is like a fractal. And we can see here the inducement to the highs. It tried to push through twice, and it couldn't break. And you can see here, if I go to the 15-minute, actually let's take this fib ops here. You go to the 15-minute, you can see the sessions. So London session gives us this high, this low. New York gave us a retest, push lower. Probably it didn't break yet, because you can see all of these candles are touching the line, like this line right here. This is the London session low. All the candles are touching. So it just consolidated, and what we like to see, like I said, is a clean break where the next candle prints. We want to see a candle print like this. So these are all touching, but we want one that's just like this. It's going down and didn't touch at all. That's going to tell me it's broken. That's going to make me feel more confident knowing that we are actually going that direction. And AJ is giving us, and you can see even the EMAs too, guys. Like, notice the EMA behavior starting to cross to the downside. But if you went back to EU and GU, when it came near it, it didn't even start crossing. It stayed apart. Just look how it stayed apart. It came down, but this didn't even flinch to start curving to the downside. But the moment you go to GJ, it comes a tap. Look what happened. Started to curve away. Go to AJ. It's curving away and crossing. So what am I led to believe? It's gonna sell. It's gonna sell for a little bit of time, you know. And you can capitalize off of the movement there. Like I say, make a cool $8, make a cool 20, make a cool 100, 200. It adds up. You wouldn't go drive around for the same amount if it didn't add up, but you didn't know that. So that's gonna wrap it up. I'm only gonna go over those main pairs. I do break down a lot of other pairs. So if you guys want to see anything else outside of my main pairs on YouTube, you guys will have to tap into a live stream. I won't be going over NQ, US30, none of that unless I'm on my live, so that you guys can actually see what's going on with those in real time. But I'm just going to keep it focal and keep it simple when it comes to the YouTube, so that you guys can see the correlations between these 6 economies here. And then also, I'll use this forecast tool. It's called the DXY. There's a DXY, there's an AXY, and a EXY, right? So these are all forecast tools, and as you can see, I break them down the exact same way I break down everything else. So these is what I'll use to also forecast live in terms of knowing what should be getting stronger or weaker. So you can see the DXY looks like it's going to be getting weaker, or the US dollar looks like it will be getting weaker for a little bit. The Australian dollar looks like it's going to be gaining some strength. The euro dollars is looking like it's going to continue to gain some strength, or the euro pound. And the Japanese yen looks like it's going to be trying to gain some strength here. So with that, you can kind of see where the correlations are going to kick in, where if euro is getting stronger and US dollar is getting weaker, well, it's safe to take a long bet, right? If the Australian dollar is getting stronger, US dollar is getting weaker, it's safe to take a long bet. So you can think of it like a teeter-totter. Now, I don't have one for the Great Britain pound, but hopefully I'll come across it. And yeah, with that being said though, hope y'all enjoyed the video. I didn't expect it to be this long, but definitely stay tuned, get in tap with me. I do play a lot of games. I be playing Call of Duty is like the main game, So I will be posting content on my channel at Evasive FPS. But if you guys bump into this and you guys fuck with the content, definitely feel free to drop a like, subscribe, stay tuned for more, and catch me on stream, man. I'm usually live more than I'm posting, so that's definitely the wave. But with that being said, y'all have a great day out there. Hope y'all enjoy the content. And again, bring your questions to the stream. Let me know what y'all think, and have a great night. Peace out.